Why Toronto condos are primed to skyrocket in 2022? Stay tuned to find out. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property. So glad you joined me here today. I'm going to tell you why I personally think the Toronto condo prices are primed to skyrocket in 2022. Now, if you've been following me, you'll know that I'm more bullish on condos this year, so 2022, than freehold homes. It's not to say you shouldn't buy freehold homes, including your detaches, semis, and your freehold. It's just that from a percentage, as a percentage year-over-year increase, condos should be higher than the freehold amount this year. Now, I'm going to show you the trends and the data that I've put together later in this video to come to this conclusion, and you can arrive at it yourself and whether you believe me that condos are going to increase higher than freeholds. Now, you have to remember, whether it's a good investment, it really depends on you, and you have to look at the numbers, right? So I'm going to touch on more about that at the end of this video, so make sure you stay tuned. Now, first off, let's talk about the multiplier between a 416 condo and a 905 detached. I've gone through this many times in the past before, and I always like using this particular metric to compare between the two and whether which one's undervalued, right? So you can see on the chart over here, and I'll explain this to you. When prices for a particular asset become too high, so in the case of right now, the freehold market is much higher, the condos will go up afterwards because there's a value proposition and dislocation between the two. Now, we saw this in 2017 and 2016. It kind of ebbs and flows up and down. And right now, the freehold market in the 905 is much, much higher than the 416 condo, which is like right down here. So on the orange line you see over here, that's the price of a 905 detached. You can see that just goes straight up to the top right corner of the chart since the pandemic, where the blue line is the price of the condo. It's kind of stuttered a little bit and kind of stayed down. Now that gray line is the multiplier that I normally look at. And you can see in the last 10 years, it should be around 1.5 times. And you can see that at the start of 2017, when freeholds ramped up like crazy at the start of the year, it went crazy and the gray multiplier went over 2. So you see that right there. As the market crashed for the 905, it reverted back to the norm, that gray multiplier, and the condo prices caught up to the multiplier of 1.5 when the freehold prices came down, reverting to the norm. Now, obviously, due to the pandemic, the multiplier is totally messed up again, and there are two ways this can revert back to the 1.5 times ratio that we talk about. You either have your 905 prices come crashing down like they did in 2017, and I know a lot of people are going to want that, and crash, which is technically a 20% drop, or the prices go up. You see what I mean? So for the multiplier to be at 1.5 times again, the average 416 condo essentially has to be $1 million. Yeah. That's a $250,000 increase from where it is right now, or 33% increase at the end of the year. Let's be real. I don't think it's going to be that high. But if it's somewhere in between like 10 and 33%, that's a pretty significant jump that's probably doable. Now, for the multiplier to be at 1.5 times again, using the crashing 905 detached pricing dropping method, 905 detaches have to revert back to $1.1 million, or a 30% drop. And for the record, even during the craziness of 2017, when prices went boom, right up to the moon, the price of a 905 detached went to the highest point of 1.1 mil and dropped to 891,000 for 21% drop from March 2017 to April 2018, about a year and a month. You see, that crash was triggered by a foreign buyer tax when a lot of the investors out of the country were buying up homes in the 905, right? So a policy change on demand side, like we saw the foreign buyer tax, can cause a crash. And I've been thinking, like, a policy change for investors can come as the type of people, especially in the media headlines, that are currently being blamed for the housing affordability crisis, because, everyone needs to blame somebody, not this absurd amount of money in the economy that the government has forced into, and inflation. But, not going to go on a tangent and off topic on that one. So if your investor rules do come, and I do think they are coming sometime this year, spring, maybe April, June, more on that later this month, it shouldn't specifically target the 905, so particularly like the foreign buyer tax did, and it really should be targeting everywhere, because the investors are everywhere, including the 416, not just the 905. So while a policy change can trigger like a stagnation in price, meaning flatline, or a price drop, that's still up for discussion, because it really depends on what kind of rules they set out, right? But I'm pretty sure it won't be as specific and targeted as to making the 905 come crashing down. So the likelihood of the 4 and 6 condo prices by that analysis is more likely than the 905 specifically to come down and crash, right? Now, if this is the type of real estate content you enjoy, make sure you help us spread the knowledge out there by smashing that like button and subscribing to the Prime Top Realtors channel. And you can do that right here. Now, the reason why we make a lot of this video content is to share a lot of good information with you out there, because all this real talk is so that for us as our company, we can be real and transparent with you, so that when you're ready to buy your home, invest, sell, or you just think about something real estate, be like, Zen, that guy, he knows what he's doing, right? So you can book a call to me to strategize your future. And you can do that using the link right here at the bottom of the screen, which is www.chatwithzen.com. The other reason I like to use the 905 to the 4 and 6 condo is that most people who, raised a family or raised in the 905 in the suburbs generally have kids that have aspiration of going to school in, University of Toronto or Ryerson, whether that's the kids' aspirations or the adult aspirations, which means that they're very likely going to be buying a condo for the kids in the 4 and 6, during the school year, like in university, right, from their 17 to 18 all the way to the next 4 years, or really just to get them started so they can own something, because a lot of parents are concerned about where prices are going to be. So when your 905 detached has gone up, say, right to the right-hand side, you can refinance and take that amount and go buy a condo. You see, it's a circular effect. When the 905 prices go up, the 4 and 6 prices condos go up as well. There's just a delay in the market depending on what the market conditions are. So again, 905 detached go up, 4 and 6 also goes up, right? But of course, when I was saying depending on marketing conditions, we have to see what the financing policies allow for at the time when prices go up. So now here's just a little bit of context as to why I believe this as well, like story time. So when our team was selling a lot more pre-cons back then in 2017, when it still made sense, 90% of the units that were purchased were from 905 homeowners, right? From our data specifically, who essentially refinanced their 905 homes to buy something for their kids because they think they need to, or it was just a good investment because of the affordability price gap between the 905 detached and the 4 and 6 condo. And now has another perspective for you. With pre-con prices at $1,500 plus in the downtown 4 and 6 right now, and resale like $1,200 for similar product, the gap is still quite large for resales to go up to $1,500 to catch the pre-con. And then the last reason why resale makes a lot more sense right now is because of the appreciation play, right? This is what I'm going to go through with you right now. The analysis on whether you want to buy a condo in 2022 only makes sense if you can follow these two criteria. In order to buy a condo, you essentially need to be comfortable with cash flow negative property. It's just almost impossible to find cash flow positive with the condo at 20% down. The best cash flow performing condo we've seen, at 20% down, 2% interest rate, 30-year mortgage was like minus $350 a month after condo fees and taxes. And this is a studio where the maintenance fees and the taxes are lower because it's smaller, which offsets how negative your cash flow are. So as you get larger and larger into units, say it's a 1-bedroom, you're looking at like minus $500 to minus $600. And this is before the price appreciation we saw in the last month. The 2 bedrooms, looking at like $1,000, which is a lot because taxes and maintenance fees got higher. However, the appreciation will likely happen more to the 2-bedroom space as those who are priced out of the freehold homes, or around the $1 million price point, which has happened already. They move towards a 2-bedroom and kind of just settle, right? Luxury condo settle. So especially those like nicer 2-bedroom condos, it makes a lot of sense for people who need to raise a family there. So if you're an investor, a condo makes sense only if you're comfortable with the negative cash flow and higher appreciation in 2022. And you can probably offset the negative cash flow if you have a strong portfolio of cash flowing properties outside where you can sustain the negative from the condo, and that'll make sense because then you get more appreciation on the condo. Because you remember, you make your money on the mortgage pay down and the appreciation. You just have to sustain the cash flow negative so you can carry it in case poo-poo hits the fan. And you know what? You'll be, like some of you may think it's crazy, but you'll be surprised how many of my investors are out there looking like this, because cash flow is taxed at 50% since it's passive, so you don't get that much after tax. But some investors just want negative cash flow to offset, all the cash flow that they have and just take in the appreciation instead because it's unrealized capital gains. And if you understand that, you're a very sophisticated investor. Now, this is why I'm saying everybody's situation is different based on where they are financially and what their goals are and kind of what their portfolio looks like. So if you're looking for a one-on-one personal consultation to determine, what's the best approach to the type of real estate investing and the type of strategy that makes sense for what your goals are, then you can reach out to me using the link at the bottom of the screen right here, which is www.chavzat.com. And maybe you can be ready to capitalize on the fact that the condos are primed to skyrocket in 2022. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.